So let's get into it, eh? Okay, so the basics of cryptocurrency. I think the sort of number one key basic to wrap around our heads is disposal events, because disposal events are the things that are going to trigger tax. Okay, so when you just go out, so let's just say I went out today, I opened an account on the exchange, I threw $100 on that exchange, and I bought some Bitcoin. At this moment, nothing to report from a tax point of view. Just got my Australian dollars, I've converted them, and now I own some Bitcoin. So I actually haven't had a disposal of an asset. Yeah, I've had a disposal of Australian dollars, but that's not going to have any implications. It's one Australian dollar is the same for tax purposes. So now I've got this Bitcoin. It's when I eventually dispose of this Bitcoin that I have a taxable event. So whilst I'm owning this, so I might own this Bitcoin for the next week, maybe the next 2 weeks, 2 years, 5 years, 10 years, it doesn't really matter. If I'm still holding and owning that same Bitcoin, very important then, the same actual cryptocurrency, nothing to report. It's when I no longer own it. Okay, so when may I have disposal? No longer own it. I might convert that crypto back to dollars. That's a disposal event. Maybe it's not dollars, maybe it's euros, for example. If it's any other foreign currency, American dollars, British pounds, New Zealand dollars, you name it, all those foreign currencies. If I no longer own that Bitcoin, that's a disposal event. So I've got a gain or a loss. But there's other events. If I've exchanged my crypto, my Bitcoin for another crypto, let's say Ethereum, that's a disposal event. If I use my Bitcoin to buy something, let's say I'm lucky enough, my Bitcoin goes to the moon and I can afford a Tesla. I buy the Tesla with my Bitcoin, that's a disposal of the Bitcoin. Maybe I gift the Bitcoin. Maybe I gift it to a friend. Say a friend's having a birthday and I gift it to them. That's a disposal event. There's tax implications for you. And also, you might have a loss event. Unfortunately, maybe I just forget my password that I have for my account there. I lose my Bitcoin. I no longer own it. Maybe someone's come along, they've hacked my account and they've taken my Bitcoin. That's all disposal event. So these are all events that are going to cause some tax outcomes for you. We have to work out whether or not you've made a gain or a loss. So here, I'll give the simple scenario, $100 into Bitcoin. Say 3 weeks later, I can now convert my Bitcoin over to Ethereum. At that time, we go, okay, what was the value of the Bitcoin that I gave up? Or you can look at the other angle, what was the thing that I got? What was the value of that? They would be both the same for these purposes. So when I give up the Bitcoin, it was worth $300. When I got the Ethereum, that Ethereum I got was worth $300. So I made a gain in this scenario. It's $300 minus $100, I made a $200 gain. That's sort of a simpler scenario. Now the key here to recognize was that it's all done in Australian dollar terms. So we know that when it's crypto to crypto, there's no actual Australian dollars involved. So what we have to do is we have to find the reference point of what was the value at that time. Now sort of the tax law would say at that time, work it out. Practically, what this means is we have to go and look up a reference of the value of those assets at the time of that exchange. So something that's reasonable, that's accurate. So there's various websites out there that report cryptocurrency values in each day. So find out what was the value on that day. A lot of times they're referenced in US dollars. So we go, okay, that exchange was valued in this amount of US dollars. Okay, and then we have to go to another separate space to look up, okay, what was the US dollar to Australian dollar exchange rate at that time, converted over, now we've got the Australian dollars. So that's sort of the behind the scenes sort of mechanics of doing the accounting there. Okay, so what if I, instead of say buying Ethereum with that Bitcoin, I bought something, I don't know, I went out and went to dinner and I was able to use $100 of Bitcoin to buy me, my family and friends at dinner, $300 worth of dinner. Much the same here. We've gone ahead, I don't have the Bitcoin, what have I got in exchange? Got in exchange something worth $300. So it's $300 minus 200, I made a $200 gain in that scenario. So that's a gain that needs to be reported. Later on in this course, we will, of course, look into the personal use exemption and whether or not that might have been tax-free. But for now, for these purposes, let's just assume that was taxable gain. So that's how we've calculated it. And it's sort of the similar, very similar, exact same sort of elements that play if it's gifted. So if I bought $100 worth of Bitcoin today, in 3 weeks, got a friend's having a birthday, I give the Bitcoin to my friend. Hey, at that time, the Bitcoin was worth $300. Because it was worth $300 and I didn't get anything in return for that, the tax law basically says, okay, you were deemed to have received $300 at that time. I know you didn't receive it at that time, but that's what the tax law says. Tax law says whatever you gave up, you look at the value of that thing that you gave up at that time, and that's what you're deemed to have received. So now it's what you're deemed to have received, which was $300, the value of the thing that you gave up, minus what it originally cost you. So in this example, $100. So at 300 minus 100, I've got a $200 gain. So all those separate events, different type of disposal events, same sort of outcome, same gain made there. When it comes to a loss or theft, the thing here is because it's a loss or a theft, you didn't really, you definitely haven't voluntarily done this to lose your Bitcoin in these aspects. So the tax law doesn't say that you're deemed to receive that in exchange anymore because you haven't actually received anything back this time. So the tax law says, all right, that event at the time, you had the loss or the theft that happened to you, you received nothing. What did it originally cost you? Now you made a loss. So in this example, I lost my password or my Bitcoin was hacked, or basically the cryptocurrency just ceased to exist anymore, which unfortunately does happen from time to time with some cryptocurrencies, and the blockchain ceased and there's no more developers. I'd have a loss, and it'd be at that moment that I have that loss, and then I have to put that loss in the applicable tax return. So they're your basics when it comes to disposal events.